Kathryn Rooney Vera joins us right now, the chief market strategist at StoneX Group. And Kathryn, I do want to start here with this slew of economic data that we're going to get this week in the U.S., kind of the prelude to the Fed's meeting next week. And of course, on the heels of that big jobs report that we got last week, that certainly created, I guess, to certain people, a bit of disappointment.
Certainly does, and I think everyone expects the Fed to cut 25, maybe 50, probably 3 times 75 this year. But what happens next year? And I think what the main focus, at least from StoneX, is where is the neutral rate? The Fed anticipates that it's about 3%. What if it's potentially 4? I mean, we see financial conditions very easy. We see credit spreads extremely tight. We see the S&P near record highs. So that tells me that the neutral rate could perhaps be higher than what the Fed anticipates. And the implication there, Romaine, is that there could be a policy mistake in the offing of doing too much too fast, and then having to. The worst thing for a monetary policy entity is to have to reverse course.
And of course, that's been a big debate, particularly with all of the pressure coming from the Trump administration and the idea, at least in the president's mind, that the ECB has sort of gone the lengths already that maybe he wants to see here in the U.S. You know, I should point out, though, we came into this week with an expectation of focusing on the U.S., but a lot happened over the weekend overseas, in Japan, obviously today in France, but Indonesia and Argentina as well here. There's been a big focus right now on whether there is a viable alternative to U.S. assets. I should say a reliable and consistent alternative to U.S. assets. And I am curious if you found any sort of potential sort of follow-through on what we saw earlier this year, which was that sort of outside the U.S., find assets and move.
I would probably rephrase it, Romaine, as saying, rather than a viable alternative to U.S. assets, where can I get more bang for my buck and juice? Because the S&P has done well, but the Brazilian Bovespa is up 30%. Europe is up 30%. So it's a market outperformance from international markets versus the U.S. So I do think that there are opportunities for more value hunting outside. And in fact, I was on with you August 1st when the president announced the 50% tariff on Brazil. And I said, buy Brazil. And Brazil's up in another 11% since that day. Just to give one example, Brazil has a 15% Selic rate. It's the highest real rate in large countries. So you can get some attractive pricing. And the truth is that a weak dollar, dual deficits, the fiscal and monetary side in the U.S., and lower rates in the developed world are all tailwinds for emerging markets. So I do think there are some opportunities, especially in the likes of Brazil, emerging Asia as well.
So I hear what you're saying, and we've been listening to bullish arguments when it comes to Europe, when it comes to emerging markets all year, but it feels like especially with U.S. investors, that home bias is so strong. So how do you socialize and convince your clients that now really is the time that we should be looking outside the U.S.?
The good news, Katie, is at the beginning of the year, we recommended long European stocks in general. So we're saying unwind that trade and be selective with sectors. One of the sectors that we like in-house is utilities. You're seeing Europe move a little less green and more towards nuclear energy and the like. So I do think utilities trading where they're trading 4 times cash, I think, is very cheap. So you have to be selective in some of these places. But I do think that the upside is potentially limited in the U.S. Maybe we go another 10%. But there's a lot more room to run in foreign countries, especially if, in fact, their currencies are going to appreciate versus the United States, which I do think the dollar is probably going to see a little bit more downside over the next 6 to 12 months.
Yeah, after a lot of downside that we've seen in the last 6 to 12 months. Kathryn, great to get some time with you. Great to see you in studio. That is Kathryn Rooney Vera. She is Chief Market Strategist over at StoneX Group.